ETFs are growing so fast. I didn't know that they were encumbered in some way. It certainly didn't seem like it. But what is the SEC going to do now to allow this industry to theoretically grow even larger? Right.
So the little known kind of like backstory to this is that ETFs have had to seek an exemption. For every new issuer that comes to market, they need a special order from the SEC to be able to start selling funds. The SEC has now done away with that, issued this rule, which means that any new issuer that wants to come to market can now do so without going through that laborious and sometimes quite expensive process.
But so the idea is that they have to meet some sort of conditions ahead of time, and we're just, taking them on faith? I mean, how does this work?
So they're still going to have to file registration documents. So this is no kind of like get away from having to have a prospectus out there that the SEC can look through and make sure it all checks out. But basically this avoids kind of like having this long kind of like run up to the process that used to be able to take more than a year for people to get approval.
Is this kind of related to the 11 Spy Kids in that the existing law was built on law that proceeded long before anyone had ever heard of ETFs, and so they had to shoehorn ETFs into old law, and now they don't have to do that anymore?
I think that's very much the case. I think this is really kind of like a question of the ETF industry coming into the 21st century.
Yeah.
You know, we saw ETFs sort of start out in the US in 1993. Obviously, there was some experimentation with different kind of structures, as we saw with the Spy Kids story from a month ago or so. But actually, this is really kind of like an example of the SEC now looking back through those rules that have allowed ETFs to kind of like proliferate over the last sort of 26 years and saying, hang on a second, isn't there a better way that we can do this now that this is a $4 trillion industry?
But even with that stringent process to get approval, there have been a lot of ETFs that have come to market that I guess have been somewhat questionable in their approach. And I'm just wondering, does this sort of open the door for can Joe and I just start our own sort of like Libra, triple leverage ETF and charge you, 3 points on it?
So that you might have a little bit of difficulty with still. You'll still have to go through the SEC because leveraged ETFs are not part of this particular rule. The SEC has made very clear that this is for vanilla type of funds.
What about, I know there were questions about blockchain ETFs, and they're like, is this really a blockchain ETF when you have Facebook and Microsoft in it? Is there a little more flexibility there?
So those will still have to kind of go through the original registration process, and there the SEC can kind of crack down if they think that the name is misleading. There are provisions that allow them to basically say, hang on a second, if you're calling this a blockchain ETF, you need to show that there is 30% allocated to blockchain, and you need to prove how you are going to actually do that. So that still exists. The registration documents are exactly the same. But what this does allow is it means that new issuers have an easier path to market, and for existing issuers that maybe are running fixed income funds, it also smooths out some of the issues around how you kind of go about getting debt instruments into and out of the fund, gives them a bit more flexibility that could encourage proliferation there.